Meanwhile, Federal Reserve, good day to look at your 401k, people. The Federal Reserve signaled a possible drop in interest rates next year, and that sent the stock market soaring to an all-time record high. The Dow stock index jumped more than 500 points yesterday, landing above 37,000 for the first time ever. That's what a record is, one of many signs that the economy may be moving in a better direction. But, of course, many Americans aren't buying it. Joe Ling has more on this. Joe, there's a big disconnect between Wall Street and the street, as they say. Why is that?
Yeah, that's right, Tony. Good morning. There is that big gap between the numbers economists look at versus what's been called basically the vibe economy, how people are feeling about their personal finances. So here's the big picture. The Dow Industrials hit that record high after a big year, with the Dow up nearly 12%, the NASDAQ up more than 40% in 2023. And you've got unemployment dropping to 3.7% in November. That's a nearly 5-decade low. And inflation, of course, as we know, has stabilized around 3%, down from 9% in mid-2022 after the pandemic. And that's driven largely thanks to cheaper gas prices. But those aren't the only numbers that matter to people. So many people believe that everyday expenses are still just too darn high. For example, eating out at restaurants got more expensive. So did rent for apartments. And get this, car insurance is up more than 19% year over year. So taking a look at a recent CBS News poll, 76% of Americans say their income is just not keeping pace with inflation. More than 60% say the nation's economic condition is bad. Now, our poll was taken before this week's stock market rally, so of course, perception could change, but the disconnect here is very real as people head into the end of the year. And Chair Powell, the Fed chair, basically said so far so good, but the path forward is still very uncertain. Nate?
Very uncertain, that's for sure. Joe Ling, thank you.